Hi everyone, my name's Sam. Welcome to today's Monday market update. As always, I love bringing you these episodes on a Monday where we talk about all the latest happening in the market. Are we seeing a slow grind recovery? We'll check out the charts in a sec, but I wanted to start on the crypto fear and greed index. Always a good spot to check in, maybe once a month, every few weeks, just see where the sentiment currently sits. And as you guessed, it is directly in the gutter and hasn't changed much for a long time. This in itself should tell you something, that we are at one extreme end of the spectrum. So today we are at 12. Last week we were at 9. Yesterday at 14. Last month 13. Fairly consistent across the band of recent months and weeks, and it's no surprise when you think about what has been happening in this market, and we're firmly in that early bear market territory. You could argue that we have actually been in a bear market since 69,000. That is absolutely an argument to have, and there are valid points on either side. Right now, it feels like we are directly in the capitulation phase, very similar to what we saw in 2018. We also saw a capitulation in 2020. Larger market forces just take over. We see a tremendous amount of selling and a wipeout generally of derivatives, which means futures and other products that people have bet leverage against the market, which generally creates those big crushes to the downside. And then we also see a lot of panic sellers come in at the last minute. So retail investors like you or me, or even funds and institutions, come quickly and try and sell their Bitcoin, their crypto on the market to try and just get themselves into a bit of safety, move into cash. And crypto currently has gone through a fairly tumultuous phase in that it hasn't been a lot of retail capitulation, in my opinion, from the data I've been seeing over this past little period. It's actually been large funds, some institutions that have moved into crypto. They've set themselves up basically crypto only, and they've had a lot of crypto on their books, but they've hyper leveraged themselves either through some of these centralized finance platforms, and you learn a bit more about that in the course if you haven't gotten to yet. But these platforms, some of them don't have very large safety nets behind their protocols, and we've seen a few of them blow up, like Celsius. Also seen BlockFi get in a little bit of trouble as well. We heard about Three Arrows Capital, which is another fund firm or brokerage that went under. And a lot of these firms have a tremendous amount of crypto, which they see the writing on the wall, they want to get in front of it, and they begin large scale selling. So if we're looking at the crypto fear and greed index, this comes from a lot of Twitter and social sources. So it can't really anticipate those sort of events. However, this does give a very good indication of where we sit in the overall market cycle. And if we are moving either through the middle of a bear market, start of a bear market, or towards the end of a bear market, should give us a fair indication of where we are. So if we look here, we are in a very strong and heavy concentration of extreme fear, which is good to see. Back here, the last time we saw these kind of concentrations were in those bear market territories, but even then we weren't in these, say, this really structured, heavy, low under 20s, in the 10s area. In fact, in modern history, the previous time we saw it was, I thought it was 2020, but not even then. It was around the 8th of May 21 region. So that's really interesting to see. And again, I think retail has largely left this space for the time being. And that's what you see in bear markets. You see a lot of the retail just completely go. And a lot of that money wasn't actually in Bitcoin and Ethereum this time. It was in metaverse tokens, was in meme tokens, a lot of this hyper speculative niches of crypto. So that has largely been flushed. And NFTs as well took a lot of the steam out of maybe older cryptocurrencies that have been in the space a bit longer. All right, so we know that the fear and greed index is locked in this capitulation in this extreme phase. What I will just add here is that it can stay in these regions for a lot longer than you think, but it does give you that indication to yourself to go, okay, well, we are closer to the bottom than not. We are closer to the end than we were yesterday. So you can start to think about that, position yourself for the next few years, few months. Doesn't matter. You can give yourself that forecast that or where you think the future might be headed. So one chart I want to just start on here is the full market cap, which it's just reloaded on me. I'll just get back to that full market cap. where are we? Total market cap. Perfect. Have it there. Let's go out to the weekly and get a really good look at it. So I like this chart. I think it looks really, really good. And why I like it is because the 200 weekly moving average is giving us a really good signal here that the market has bounced strongly from it, including this bottom range. So this red line here, this is the 200 weekly moving average. So every single candle on here represents a week of price action. And this line here represents the average price over that period of 200 weekly candles. So that is that line there. And generally the price action tends to gravitate towards it over multiple cycles. It overextends from it when the market's in a peak state, and when we're moving into a more bear state, it comes all the way back. And that's the same in Bitcoin. It's the same in Ethereum on a lot of charts. So the crypto total market cap is every single crypto in the ecosystem, the market caps combined. You can see the entire space in one chart, basically. It's very, very useful to look at. You can also look at the crypto total market cap excluding Bitcoin as well. So you can just see how altcoins are doing. But what I like about this chart and what it's basically telling me is we know Bitcoin is under its 200 weekly moving average. This shows me that if you're looking at the entire ecosystem, that includes altcoins, metaverses, NFTs, all that, we see that we are seeing a bounce above it. So altcoins are definitely getting some love. So it's been a while since altcoins have had a relief bounce, but I think we're pretty much there. We should see a little bit of a bounce up to some resistance levels. And that's the general theme of this episode that I wanted to convey is crypto is now ready to move back and contend with resistances to try and figure out where it's at, whether it wants to go lower or whether it does want to go higher and breach some of these resistances above. And right now, that first resistance for the overall crypto space is above. So that would be a move up, let's say from here. So really nice encouraging candles on the weekly, but maybe a 16 to 17% larger move up to this $1 trillion mark. So you can see just over here on the right-hand side, it's about $1 trillion. But the reason why that is such a big level is, yes, it's a whole number, but mainly because this is the last time this was used as support over here. So we're running back into that support now turned resistance. So we come up here, the market is due to reinflate just a little bit. So that makes sense. But then there should be a tremendous amount of sellers come in on any alt bounce that does come in, either the dead cat bounce, which means it's a short-term bounce that gets sold off rather quickly. So people that are underwater looking to get out of their positions, any bounce they see, they'll sell off into it. So do be prepared for that. Do not go chasing green candles. This is a market trying to bottom itself. And, you know, large ships don't turn around very quickly. That's what you need to think of here. There's going to be a lot of opportunity for you to slowly enter this market. Just if you are, it's a slow accumulation, slow dollar cost averaging situation. If we look back here as well on the RSI, so this is a momentum indicator showing you the strength of buyers and sellers. We've never seen the chart be this oversold, even going back to, I think, 2014, we saw it last in this general region. Yeah, so right now the market has never been this oversold, meaning that we are closer to a reversal than not. This just means sellers are in total and utter control, but it does flag that a reversal will happen eventually. It doesn't stay in these regions forever. It does eventually revert higher. It has a reflexive tendency to move back to moving averages higher. So that is what we want to see. You look at the overall trend, it's absolutely clear. See just straight up a diagonal line and moving higher. And gold there, if you're wondering what that means, that's the total market cap of gold. So just interesting to watch. I'll just quickly flick through a couple of charts. So dollar, really, really important chart to watch. Does look like it's trying to cool off a bit. Now, if you know correlations, something we discuss very heavily in our Mastermind course, but if the dollar is surging, if it's in a real peak state, we've seen in the past, every single time it's in a peak state, Bitcoin and crypto are falling towards lows. If the dollar is having a nice pullback, if it's falling lower, trying to find a floor, crypto and Bitcoin are moving much higher, moving almost into peak bull market. So they are reverse correlated. Again, when one's up, one's down. So that's all you need to maybe look at this chart for. But overall, the dollar is a very strong force right now. It's what's driving a lot of the macro. It's so much more nuanced than that. But if you're just looking at a chart, you can look at this one. Also, you can just see on some of these peaks, the buying momentum is starting to trail off as the dollar chart's going higher, which generally is a bearish divergence. So this is on the weekly. It's a pretty good divergence, to be honest. Wouldn't be surprised to see the dollar pull back a little bit here, which would be really, really nice for a bit of a bounce across the board. NASDAQ, yes, we have had a bit of a bounce as well, but please keep in mind that the trend is overwhelmingly down. Haven't reached the 200 weekly moving average down here, which is another guidepost on the weekly. RSI had a nice bounce down here, double bounce there, got a little bit higher on the second time. Look, would not be surprised, like altcoins, like crypto in general, we see a bit of a relief rally here, a bit of a bear market rally up to some of these moving averages before we have to really see what the market wants to do. Are we going to punch through with conviction, or are we just gearing up to go lower? That's what you want to see from these charts. And you don't want to make any decisions, say, oh, the bottom's in, or, you know, going back to highs just based on one green candle. You want to see a trend reversal. So you see this very sharp move down in these candles. You can't say that anything's changed till we, one, break the trend. So we see candles higher than, say, this candle here. So a bit of a bounce, come up here and begin to cut through some of these moving averages and create some higher highs. So that's what you really, really want to see. S&P 500, yeah, similar boat. Now, I won't talk too much about the S&P 500, similar to the NASDAQ, but we've got a couple of dates you just want to keep in the back of your head. We've got an FOMC meeting, so that is the Federal Reserve minutes coming up on the 10th and 11th of July, I believe. They'll flag what interest rates are going to rise. Now, we believe they're going to do a 0.5 or 0.75. If it comes in lower than what is predicted, market should see a nice relief rally. So that's sort of in my mind that there might be a dead cat rally here, but do not get too caught up in that. Then on the 13th of July, we will see a CPI print. So that's the Consumer Price Index. It's been driving a lot of the fear in these markets as well. Both these events, we should see a bit of a leak to the press. So with whatever happens, the markets will tell us in advance. So markets are very forward looking. We need to get through this phase, and then we can really start to look at the back end of the year, Q4, about hopefully inflation starting to pull back, Federal Reserve's running into a few roadblocks, raising interest rates. That's the thesis that will begin to start to play out, and then risk will start thinking that early and pricing that in. So this is really a phase where everything's on sale, everything's at a discount. You want to have a strategy and a plan to move in slowly, but don't completely sit on the sidelines waiting for the entire macro picture to change, because the time it does, markets will already have priced it in. That's what I want to maybe just say there. So keep an eye on all that. S&P 500, yeah, still downtrending, just like the NASDAQ, but it is being sandwiched between these two key amounts of moving average. So the 21, the 50, and the 200 on the weekly. Again, can't really be decisive either way. If it gets above these moving averages, we are trending higher in a bull market. I want to be careful saying bull market, but the bulls will be back in control. Below the 200, then we're in a bit of trouble again. All right, let's look at Bitcoin. Again, the overriding theme is running back into resistance. And if we look here, there's a few things I want to just unpack real quickly. Bitcoin is really running into this confluent overhead resistance. So why I say confluent is because we just zoom out. This is the Fibonacci retracement, the 0.786 line here on the daily. This is a very key level that we want to break back through, but it's going to be super, super difficult to do, because that is also the same area where the 200 weekly moving average is on the weekly. So in a very brief nutshell, we're seeing Bitcoin do exactly what we want it to do. We're seeing both higher highs and higher lows. So see here, this low here, next low's higher, this low's higher. We're just going to wait for this to close before drawing a full conclusion. And the highs over here is consistently moving high. So the trend is clearly going up, and we're about to really test this resistance. If we get rocked into this resistance and cannot breach, or it's just really weak, we will come back down to contend with these lows, and we'll really figure out whether we are at a bottom area. But if we can break through these areas with conviction and begin to start to trend and go sideways, constantly making progress, then things will begin to look better. And these price targets lower may not be a thing. So let me just zoom out just a tad. Another thing to contend with is the RSI. It can't change our focus until we do see positive momentum on this RSI and a break of the trend. See this line beginning to approach the trend? It's not even close, hasn't even broken through, so pay attention to that. If we get through about 22,000, then it's likely that this will be breached. We want to get above it, trend higher again. So you see the point there. Oh yes, we'll look at the fear and greed on the weekly as well, just on the chart. Just want to go back here. So to illustrate just quickly again what I was just saying, about getting above that 200 weekly moving average. So here we can see this red line. There's a bit on this chart, it's a bit noisy, so just try and ignore most of it. And the Fibonacci retracement, the confluent, you can see how close these lines are. This blue line and this red line, they come together. So it's forming pretty much a super resistance for Bitcoin right now. So we really want to crack right through it and then get on top of it, come back and use it as support, no longer resistance. Then we can get far more positive that crypto has bottomed, because then we will just have a big floor beneath us. But right now we can't get too excited. So yes, keep that in mind. Let's get rid of that for more clarity. Okay, and now the fear and greed index down here, I just want to quickly show you, because this is actually an indicator you can add to your charts, and it shows you in a way that crypto fear and greed index, but on a line. So if we look at where we are at the moment, and I just zoom right out on those charts, the last time we were in this area again was 2020, and I believe if we go back, yeah, same for the bottom of the bear market over here, we were in these same areas. So we're touching these lows. Can it go lower? Of course. But is it more likely that we do reverse sooner rather than later? Yes. And if we look here, you can almost chart that going down, a break in this sentiment overall chart. I don't know how accurate this would be to chart, but it is interesting. You can see definite trend falling lower, break up through there, and we will have a trend change. Okay, just quickly on Ethereum, super similar to Bitcoin, as well as a lot of other altcoins, but Bitcoin and Ethereum will lead this. It will be very fascinating who breaks out first if it does. This is actually looking quite nice on the RSI. If you've looked into hidden bearish divergences, it does look like there is one there, but very similar to Bitcoin. Those lows continue to get higher, just keeps climbing out, and these highs get a bit higher. What I would get a little bit worried about though is this structure here. If you're looking at patterns, looks like a rising wedge. So it's very clear to me that if this doesn't bust up through this resistance, I think it's going to have a real tough time, same with Bitcoin, then generally this is a bearish formation and will break to the downside, maybe forming a higher low, a larger higher low over here. If we look at a Fibonacci retracement, this could very well be in play, and that could go there. Let's say if we just fall back from here, come back to say maybe just under 1,100, come around to the 0.618 area, and then move higher from there. So that's on the cards. But again, we're looking at the real granular stuff here, and you really shouldn't be. Just zoom out and just look at what's coming in the future and how you're positioned, because right now playing the short game, doing the short-term trades, it's just not great. Now, I just wanted to quickly highlight Chris Batten, because he was a mastermind client not long ago, and he just flagged here in our graduates group. Wanted to thank you yourself and Joe for sounding that warning bell over Celsius weeks before it went down. Sam, you guys were clearly 100% on point. I was able to remove that allocation. It would have been a hard pill to swallow indeed, mate. So thank you both. If you've had situations like this where our risk management strategies or anything in our course or our comments have helped you with, please leave a review for us. We'd love to hear it, even if it's just a comment in the groups. It really helps us know that some of our teachings are working, and along that route as well. But as well, if anyone is keen on Mastermind, this is the sort of content that we do provide in there. We'll provide you with up-to-date information on any risks that are coming around, and of course we can't see around every single corner, but after which one was it? After Anchor Protocol, UST blow up, all that, we were very strong and very quick on the Mastermind clients just to remove all risk from these protocols straight away, because there was just no reason to take the risk on at all. Go super defensive with anything you were doing in that realm until the dust settled, because there were so many firms around that had their tentacles linked in liquidity pools and different assets everywhere. You just don't know who's going insolvent, who's not, and who is super exposed. So again, if you are concerned about risk and how to mitigate it, dive back into the course. And if you have any questions, reach out to us. And as well, if you want to take things to the absolute next level, if you want to really up level that investor in the mindset within yourself, come to the masterminds and we'll give you that next leg up that you need and that constant one-on-one support to get you through this phase, because this is the time you really want to lean in to the market. Don't go back into your shell. This is the time when you make the most money, but you want to make the right decisions at the right time. And our guidance will absolutely help there. So guys, thank you so much for watching today's episode. If you would like to get in contact with us, please leave us a comment below. And if you want to chat with us about the course or mastermind, just contact the team via Messenger or click the link below. So guys, have a wonderful day, and we'll catch you on Wednesday for the Altcoin Bubble. So, bye.